Welcome back, students who are taking financial accounting. We're working on the Chapter 1 problems, Group B, and in this series of videos, I'm going to work on problem P1-38B. And if you've been following along, you can see that everything's been sort of like an evolution here. It's a matter of timing and stuff. I was trying to get videos done and 10, 15 minutes. That wasn't happening because just the nature of the subject matter. I mean, even as you can see, this one says if you're working, without talking, without making videos, it's taking about, 20 to 25 minutes just to do this particular problem. So we don't like having the the videos take that long. There's technical issues with uploading and stuff like that. So I'm trying to break them down into various parts, meaning problem 1-38B point 1, point 2, point 3. And I'm not going to be able to tell how many videos I'll end up making, for a particular problem, but that just seems to be the way it's running. So if you're looking at this, realize that there's 1, 2, 3, and 4. There's going to be several different parts. How many, I don't know. And this also will mean that I'm able to take a little bit less time, take my time making them, so I'm hopefully a little bit more clear about what I'm doing instead of trying to rush through things. And as always, you can, pause the video and watch it again. And if you still don't understand something, feel free to contact an instructor. In doing the videos, realize that I'm not going to be, depending upon the subject matter. I mean, like for example here, this problem. As I glance down at the requirements, it says, I'm going to have an income statement, statement of retained earnings, and a balance sheet. Well, I had started in exercise 1-28B, and that had covered the balance sheet, right? 1-29B was the income statement and the statement of retained earnings. Also in this last problem, P1-37B, I had to do all three of the statements for that also. Now, the thing being here is, as we progress, I'm not going to be able to keep going over fundamental concepts again and again and again. So like things for formatting issues and having an idea, if you want to understand that more, go back to those exercises. And then in the 37B, I sort of moved on to start creating a process, a flow of how you can approach creating the financial statements one right after the other. Okay, I mean the same way all of the time without just starting willy-nilly and trying to put together a financial statement. All right, so it might be worth your time to watch those videos. I mean, if you're looking at this video to be learning from it, hopefully you did the problem itself and then you looked at the answers to see where you went right and wrong. And if you didn't understand, what you were looking at in the answers, you're watching this video to get some additional thought and learning on what to do. And again, if you don't understand it, feel free to contact an instructor. Okay, so let's move on here. It says here, prepare an income statement, statement of retained earnings, and a balance sheet. So McKnight restores antique automobiles. The retained earnings balance of the corporation was $23,500 at December 31st, 2013. So it says during 2014, all right? So what I'm looking at here, and I'm going to draw a timeline, is this is 12/31/2013. Okay, so that retained earnings at that point in time was this $23,500 at the end of 2013. Now it says during 2014, so this here is going to be 2014. So that ending retained earnings most likely is the beginning retained earnings for the year of 2014. So the corporation paid $40,000 in dividends. Okay, we're going to need that to its stockholders in order to be able to figure out our retained earnings. At December 31st, 2014, okay, the business accounts record shows these balances. So just by reading along here and thinking about what's happening, okay, I'm able to put together a picture. What I'm looking at here is, I was given the retained earnings at the end of 2013, and then I had, transactions for all of 2014, and now I'm at the end of 2014. So the ending balance for the retained earnings did become the beginning balance for 2014, right? And all of this data here is my trial balance for the information to create a trial balance, my general ledger trial balance for 2014 as of December 31st. Now, a trial balance is nothing more than a listing of the accounts and the balances in the accounts, okay? And if you want to make a formal statement of it, you put the name, then you write, list out trial balance, and then you put the date. So this would be 2031, December 31, 2014. And of course you'd have your accounts and the balances in those accounts, and then you would have your total debits and you'd have your total credits. Okay, that's formal. But here it's rather informal. So as long as we know that we have, whatever balances that we need. And then it says, notice that for retained earnings, it's a question mark, okay, because we're going to have to figure that out. All right. So it says, prepare the following financial statements. Now notice it starts out with the income statement. All right. We always start out with the income statement. Why? And again, this is a theory that I've covered in previous videos, so I'm just going to go over it quickly. We have our accounting equation, is assets is equal to liabilities plus owner's equity, and that shows up on our balance sheet. Okay. And then we have our income statement, which has our revenues less our expenses, which gives us our profit or loss. This profit or loss at the end of the accounting period gets closed out to our equity, okay? And it gets closed out to retained earnings if it's a corporation. And if it's a sole proprietorship, it's generally a capital account. But since we're talking about financial accounting and we're at a college level, it's easy to think in terms of the capital account if we understand retained earnings. So that's why everything in the book is being presented as a corporation and retained earnings. Because most businesses, once they move past the mom and pop or a very, very small business, it behooves them to become a corporation in order to be able to protect their assets. Okay. So yeah, our income statement has our profit or loss, and we can't create the balance sheet until we actually move that profit or loss to the equity, all right, during the closing process. So that's why we do the income statement first. Then it's going to ask us to do the statement of retained earnings. We do that second because of the issue of dividends. Okay. If you recall, let me erase a little bit of this. If you recall, let's see here if I have it. Right, okay, this is problem 37B. And as you can see, the way it's being presented in the book is stockholders' equity consists of common stock and retained earnings. Okay, and then the retained earnings consist of revenue accounts, expense accounts, and dividends. Okay, so we're here with equity, and so our equity has our common stock plus our retained earnings. but our retained earnings consists of revenues minus expenses less dividends, okay? And that makes up our retained earnings. So we have to, in order to be able to create the balance sheet and have a retained earnings amount, we have to do the statement of retained earnings before that, right? So that we know what that earnings amount is, right? And then we create the balance sheet. Okay, so I'm going to pause here, and we'll actually in the next video pick up and start doing the problem.